Wall Street and the banks are about to push XRP in the crypto market over the edge, as now we're seeing another $16.2 trillion of institutional capital sitting on the sidelines and now being recommended to their clients as a stable and legitimate asset class to invest into the future. That said, Vanguard is finally opening the floodgates for $11 trillion of their assets under management to be buying crypto ETFs for their clients. Then you have Bank of America at the exact same time coming out and stating that its wealth management clients may put up to 4% of their portfolio in crypto. Now, 4% might not sound like a lot to us, but these guys have $4.6 trillion in assets under management. And when doing the homework based on market caps, liquidity, and consistent demand and inflows from institutional players like Vanguard and Bank of America, the numbers actually come out to be quite shocking. And this is becoming increasingly difficult to ignore because the world's largest asset manager, BlackRock, has been in the crypto game since the start of 2024 and has come out and stated that their most profitable ETF in history is nearly a 100 billion Bitcoin giant. In other words, their most profitable portion of their business are digital assets, and that's only going to expand with time. That would include other ETFs in the digital asset space, like the XRP spot ETFs that have recently launched. In other words, if you can't beat them, you must join them, and virtually everyone is jumping on board. And at one point in time, everyone was very hostile to crypto, likely because they didn't understand it. It was rife with scams and schemes. It was nascent, and because they didn't offer any products or services in those spaces. So at the end of the day, their incentive was to harm it before it could become big enough. However, they failed. And even BlackRock CEO Larry Fink recently was at a summit alongside Brian Armstrong, the Coinbase CEO, admitting that he was wrong about crypto. So we're going to be covering all of these recent developments, exactly what this could do for the prices of XRP, Bitcoin, and crypto into the near future. And by the way, check out I Trust Capital in the link in the description below if you want access to a $100 signing bonus when you roll over a 401k, a Roth IRA, or an IRA onto the I Trust Capital platform, which is a US-based platform that is not only trustworthy, but has billions and billions of dollars in assets under management and has no hidden fees or yearly fees. The fees per trade are extremely low. There is no pressure to sign up for any of their other products, and this is completely self-managed. And what I love about this platform is they offer literally more tokens than virtually any other platform in the space when it comes to investing in my IRAs, which are tax advantaged accounts. Obviously assets like the majors, but you also have things like Chainlink, Hyperliquid, Sui, BitTensor, Ondo, AI tokens, infrastructure tokens, meme tokens, Trump tokens, you name it. So go ahead and check that link in the description below for more information. And as always, my friend, if you're feeling blessed and bullish, comment 777. And if you're going to be the wealthiest person in your family tree, smash the subscribe button. Hello and welcome back to the Bull Runners channel. If you're new here, my name is Paul. And in this video, we're going to be covering a major development directly from the Bank of America, one of the largest systemically important banks in the United States, just behind JP Morgan Chase as largest bank in the United States. And then we also have a straight up asset manager like Vanguard that holds trillions and trillions of dollars, also doubling down and for the very first time allowing clients to buy or purchase crypto ETFs. In the past, they were not allowing it because they were worried that crypto simply was too volatile. It wasn't going to be here to stay. They're probably a bit more old school in terms of how they think. Then you go and see all of the scams and schemes in 2022 and how we saw some major collapses, basically the same size or larger than that of Enron back in the day, which is quite shocking. But that said, beginning Tuesday, Vanguard clients will gain access to select selected crypto-focused ETFs and mutual funds through the firm's brokerage platform. Now, that said, these products will be offered through third-party issuers. In other words, Vanguard has no desire to create their own ETFs. They're okay with maybe a BlackRock through IBIT earning on those fees as long as their clients stay happy. They keep their money with Vanguard, their assets under management continue to grow, and now their clients have access to things like Bitcoin, Ethereum, XRP, and Solana, which is wonderful. Now, they did state that this move aims to meet the diverse needs of its large investor base. And over and over again, we've talked about how the majority of investors at all of these major companies and platforms have probably had conversations with their fund managers looking at the value of Bitcoin, looking at the value of digital assets, seeing the tweets from Donald Trump talking about how we're going to create a strategic reserve, and over again have asked, can we access these products on platform? And most of the time they said, no, it's not safe enough. No, we don't offer it. But again, now if you can't beat them, join them. And I think one of the biggest nods of approval was the fact that BlackRock has stated their ETFs on Bitcoin have been their most profitable in history. And what's crazy about that is this was over the last few decades. That said, their calculations suggest that the fund, which charges a modest 0.25% fee, brings in an annual revenue haul that tops $240 million, a remarkable feat for an ETF that's less than 2 years old. And this has created for an environment where we have stronger holders, diamond hands in this space through these ETF issuers. For example, iShares from BlackRock is now sitting on a whopping 776,000 Bitcoin, while the second largest ETF issuer, Fidelity, is sitting almost 200,000 Bitcoin. And when you compare that to government entities like even just the United States sitting on 328, we have private holders through these ETFs holding far more Bitcoin to the tune of over 1 million Bitcoin. And again, this matters for XRP because a lot of this institutional support will carry over into all of the other crypto or digital asset ETFs. In other words, the first cryptos to have ETFs that are seeing large inflows, and we've talked about XRP seeing major inflows and outperforming even Solana in terms of its inflows over the last 2 to 3 weeks, then this is a sign. It's writing on the wall that the XRP spot ETFs are likely going to grow, and it's going to be because major issuers and fund managers are going to offer it to their clients. Now, as for Bank of America, we talked about 4% allocations of portfolios into crypto. And although that doesn't sound like a lot, I did do the numbers, and it will actually create for higher prices, larger market caps, because crypto is still relatively liquid. So it doesn't require a ton of liquidity to the tune of trillions of dollars to really push the price up. Even though the market caps might be another $1 trillion, in reality, that only requires billions and billions of dollars. So let's listen to this statement from Yahoo Finance.
Wall Street's institutional adoption of crypto is progressing. Bank of America says its wealth management clients should now start thinking about getting some crypto exposure in their portfolios. The firm is now endorsing a 1 to 4% allocation to digital assets for clients. Joining us for more now is our senior reporter, David Hollerith. David, talk to us about why this is such a shift.
Yeah, Bank of America's decision to allow all of its wealth customers to potentially invest in Bitcoin ETFs is certainly not groundbreaking in terms of what other institutions have done. But if you look at this from the perspective of wealth advisors, Bank of America is a full-service wealth advisory, and it's also a bank. So in terms of regulations, it has kind of the most. Morgan Stanley is another big institution in that same camp that has done that. And so they have to give out a recommendation. I say recommendation, they would call it something like allocation parameters, but they have to do this before they can sort of instruct their wealth advisor team, which for Bank of America is something over 15,000 wealth advisors to go out and potentially pitch these to investors. And now the thing there is that very wealthy customers had already had access if they asked for it, but now effectively anybody with a wealth account with Bank of America, including everyday investors and also retirement accounts, can access these ETFs as of January 5th.
Interesting. And we've got Vanguard also reversing and saying they're going to allow trading of crypto related assets on their platform.
right? I mean, that's probably even a kind of a bigger philosophical shift given Vanguard's perspective on Bitcoin that we've seen. And that also came out yesterday. And, to me, I think it's kind of speaking to this moment we're in. It's sort of ignoring the price movements for a second. But for the last year, given the Trump administration's reversal on sort of their crypto policy compared to the Biden administration, just how much mainstream institutions are sort of moving into crypto in various ways.
It is quite a moment, and you're here to cover it for us. Thanks so much, Jay. Appreciate it.
Now, the thing with this is it's not going to be all at once. We are going to have to wait to see what those inflows look like. And again, you even heard the gentleman in that video talking about how Bank of America has 15,000 wealth advisors who are essentially in the business now of doing sales and explaining why their clients should allocate to crypto. So it's going to be more like a trickle, and that would also include with Vanguard, because on December 1st, they mentioned that by December 2nd, they would start offering these ETFs, but just because they offer it does not necessarily correlate to direct demand right now, although there probably will be a slight inflow that is a little bit larger than normal in the beginning. Over time, you'll start to see a trickle, and again, this trickle is what's going to create an institutional support bottom. What I would argue is that in the past, the crypto markets would dump upwards of 70, 80, sometimes even 90+% on many cryptos, but the cryptos that have a spot ETF will no longer do that because there will be floors that major investors, funds, and even retirements will be willing to buy, which truly means that crypto is maturing as an asset class. When you combine that with a crypto market structure bill coming here sometime to mid-December or even the start of next year, and this is a recipe for a future crypto bull market unlike anything we've ever seen before. And so my personal thesis is that it's not only going to be the Bank of America's, the Vanguards, the BlackRocks, it's also going to be every mid-sized bank, every large fund manager, essentially every single person or company inside of finance is going to have to get with the times and invest or allocate a portion of their portfolio to crypto, because you're not going to beat these guys. And if these are some of their most profitable products, then like anyone who wants to be successful, sometimes you have to rip off and duplicate and adopt the humility that CEO of BlackRock, Larry Fink, did when he stated he was wrong about crypto.
Called crypto an index for money laundering. BlackRock
and thieves.
And thieves.
Yes.
Money laundering and thieves.
Right.
You now have the biggest Bitcoin ETF. So what happened here?
I have very strong views, but that doesn't mean I'm not wrong. By having strong views, you have to test yourself and ask yourself. And, in my role, I see, thousands of clients a year. I have, governmental leaders, and we have these conversations, and my thought process always evolves. And this is a very glaring public example of a big shift, in my opinion.
Now, since Vanguard has launched, we do have an update directly inside of Altcoin Pro, only accessible by our university members when you get started. And in the first 30 minutes, trade volume reached over $1 billion from ETFs on Vanguard, which is likely what created this local bottom and a bullish engulfing candle on the Bitcoin price action and chart. And this is important because it's going to lead into the rest of the crypto market. So you can see right here, we had our major range low, which came in on November 21st. We have a new higher low, which came in here on December 1st. And you'll notice on December 2nd, with those inflows of just $1 billion plus from Vanguard and probably a few other institutions along the way, created for a local bottom and a new higher high for a break above the prior range high. In other words, this is officially a new local uptrend in a longer term downtrend from October 7th. So that said, the dip not only seemed to be good for buying, but it looks like these types of inflows are going to carry the price up to at least 99 to 101,000, and it remains to be seen what happens there. But if we see that occur, occur, it's likely going to carry over into the price of XRP. As you can see, these both are pretty correlated right here. Again, exact same day, really, November 21st into December 2nd. We see the exact same price action on both. The only difference is XRP seems to be lagging just a bit. Where Bitcoin broke for a new range high up into this area over here, XRP is just back up to the prior range highs from the end of November. So we need to break above this range. And by the way, if XRP can get back above 254 to 264, which I would argue is our range resistance, then this will be new bull market territory. But as things stand, we are still in a downtrend. And even if we come right back up to, let's say, 250 and sell back off to the lower edges of this range, then it's likely we'll see a continuation for a move to the downside. So for me personally, I'm not really playing the bull market game right now. I'm playing the defensive game, which means I will buy these dips into breakouts for a retrace or a rally into these areas. But as soon as I start to see sell pressure or a major bearish engulfing candle or volume increasing and picking up to the upside as the price continues to trend down, that would be an indicator and a signal that the trend is truly intact and that this is not a local bottom, but a series of lower lows before the breakdown for a new one, which means we're likely going to see a bit of a retrace. However, I don't know if we're out of the woods just yet. And if anyone tells you they know exactly what's going to happen, they're a liar, because nobody knows in markets what's going to happen. We just try to play our best hand using the available data and information and how the price responds to that data and information. But ultimately, the price is reality. The price is king. And that's something that I teach our students over at Altcoin Pro on our live calls on Tuesday. So go ahead and check out Altcoin Pro if you want access to those live calls. And either way, I would love to teach, train, and prepare you to succeed even in a bear market, because you have to understand something about the institutions and the bigger players is that they can make money on both sides of the market. They don't simply have to buy and hold spot crypto. They can trade using a bit of leverage. They can trade perpetual futures, and they can make a boatload of money when the bottom falls out of certain markets. Another really important note is the fact that they are really good with risk management. They risk a little in order to make a lot, which is exactly why you should check this platform out, because you can access up to 100 times the capital that you're risking to play in these markets. And here is how.
What if you could trade with $100,000 without ever risking any of your own capital? Well, I'm doing it right now, trading a 100K funded account with zero of my own money on the line. I just paid a one-time evaluation fee to take a trading test. That's it. Because everyone's been asking us, how do I get crypto loans? Or how do you leverage trade without risking any of your own capital? Well, that's exactly why we're leveraging Breakout, which is a crypto prop trading firm recently acquired by Kraken with over 10 million clients, 2.5 million funded accounts, and over $1.5 billion in revenue in 2024 alone. They will fund you up to $200,000 after passing one simple trading test. And you get to keep up to 90% of the profit, and you can withdraw in USDC 24/7 after passing the trading test through the link in the description of this video. Now, here's the problem that I've seen most people face. Let's say you're trading with $10,000 of your own money. That's your rent, that's your groceries, that's an emergency fund. And one bad trade or black swan event and poof, your account is completely blown. Rent's late, savings is wiped, and your family is stressed out. So you're not trading to win. Trading your own money is trading for survival, whereas trading with 100K of risk-free capital is freedom. In fact, if you only have $10,000, you should never be trading with all of that. Instead, if you took just 10%, which is $1,000, and you buy the 100K or the 200K breakout test, and you pass the test, well, you're going to be trading with six figures without depositing or risking any of your own money. This is what I'm doing right now. And if you fail the test, you only lose $1,000 instead of your $10,000, because you shouldn't even be trading with $10,000 of your own money in the first place if you can't pass a simple $1,000 trading test. And the best part is there's no limit on retries. So that $1,000 can give you 10 shots at a 100K account if you fail the first few. That's 10x better risk management. And that's how you prove you actually know what you're doing. And this is the smartest strategy that the best traders in the world use. That's OPM, other people's money. You pass the test, you trade Kraken's money, and you get to keep up to 90% of the profits. And you can withdraw USDC on demand 24/7. So I paid, I passed, and now I'm trading 100K, and it only cost me $1,000 rather than risking $100,000 of my own money. And now it's your turn. So do not buy the small test. You're here to scale your portfolio fast. So here's exactly what you need to do right now. I left a link in the description of this video, and when you click it and select the classic one-step 100K or 200K account test, you simply click start trading, and then you enter in the affiliate code 777 on your checkout to get the maximum discount on your 100K or 200K funded account. And make sure to check the add-on box for the 90% profit split. It's only $100 extra. It pays for itself in your first payout, and if you skip it, you're leaving 10% on the table forever, so it's well worth it. Then you simply pay for the test, you pass it, you have an unlimited time frame, and you get to keep up to 90% of the profits. And again, you can withdraw in USDC anytime that you want after you pass the test. That's it. Now, we do earn a small commission when you use our code 777, but it supports value-based videos like this, and it'll help you get the maximum discount on your 100K or 200K funded account test. So click the link in the description right now, take the test, and let's get you funded.
And so when you click on that link in the description or bio below, you'll land on a page that looks like this, where you can go ahead and choose your account, pass the test, and get funded in order to make the most out of all markets, whether this is actually the bottom and we continue into the end of the year through a bull market, or whether this bear market and price action to the downside continues. Anywho, that is it for the video, folks. If you enjoyed it, be sure to subscribe to the channel, and also check out altcoinpro.com if you want a greater education and to learn how to take advantage of the crypto market in 15 minutes or less once per week, so you can hit your financial goals. Until next time, I'll see you in the next video. Goodbye.